welcome to Leaders of Tomorrow, 18 Hours special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. On the show today, to take your calls, your emails as well as your social media queries, I have with me right here in the Mumbai studios, Himendra Hazari. He's an independent banking expert. I also have Vikram Gupta, founder and managing partner of Ivy Cap Venture Advisors. Gentlemen, thank you both very much for taking the time out to be with us today. The first call is coming in from Harpreet Dua. Harpreet?
Why there is not a single point KYC for all financial instruments in the country? Let it be investments, loans, insurance, mutual funds, company deposits, and why is FATCA being imposed or forced on small retail investors? Why anything has not been done for specifically retail investors for investments less than 10 lakhs?
Thanks for that, Harpreet. Let's start with you. So, as far as KYCs go, have there been any sort of updates on that?
See, there has been updates in the sense that the Supreme Court of India had appointed a special investigative team to investigate black money, and what they suggested is that a centralized KYC registry be formed. Now, the whole point is this, that the banking industry really has about 1.17 billion saving bank accounts. The mutual fund industry is about 48 million folios. So, the main issue here is for a centralized registry to be formed is the banking system has to upload this huge database, and there is not enough pressure, not enough urgency which has gone into it as of now. Plus, it requires the coordination of all the financial regulators, that is Reserve Bank of India, IRDA for insurance, SEBI for the mutual fund industry, and the pension regulator. So, it is going to take time, but the agenda is that there will be a centralized KYC registrar to be formed.
All right, fair enough. Let's take in our next query. This is an email coming in from Parag Singhal. He's written in to us, and this is a question that we see a lot here on the Leaders of Tomorrow. He wants to know that while there are several businesses and different categories of MSMEs, labor laws, he says, are the same for all kinds of businesses, turning out to be a major challenge, a major headache for MSMEs, and wants to know if our experts can suggest a solution. Himendra, I want to start with you. Clearly, a lot of time and a lot of money and a lot of manpower is going in, managing these labor laws. What sort of solution would you have?
You see, the Labour Ministry has come forth and said that a lot of these labour laws will be exempt pertaining to the MSMEs, whether it's the Contract Labour Act, whether it's the Industrial Disputes Act. Now, the issue has been that even in the Industrial Disputes Act, for units which are hiring more than 100 people, you require the state government's permission if you want to close the unit down or want to remove laborers. Now, they're planning to increase that to for 300 and over. So, that means all those who are employing less than 300, the management of the company has a leeway of hiring and firing, as well as shutting down the unit. So, the government is taking efforts to satisfy this requirement.
Okay. Vikram, do you see this query coming up a lot?
So, I think it used to be a problem earlier, but if you see, very recently the government has relaxed the norms. In fact, if you look at the Startup India Action Plan, one of the very important things they have highlighted there is the self-compliance, and they are trying to put even the labor laws under that. As long as you're self-compliant as far as the labor laws are concerned, I think you should be fine. So, there's a lot of action that has happened, I think, post this Startup India Action plan which they've laid out. So, I think this is, I see this less of an issue these days. I don't think MSMEs need to worry of labor laws going forward.
Okay. In fact, our next query is also talking, on the lines of labor. This is a query which has come in to us on Facebook. Gaurav Mathur says, for service-oriented companies which work on manpower as an asset, how should companies look to raise capital, and what should their information memorandum or pitch to bankers and investors look like? So, specific to a specific industry.
So, we as a venture capital fund have invested in quite a few services companies which are manpower oriented companies, and one of our companies have performed exceptionally well in that space. I think the challenge really is if it's a commodity kind of a service, using manpower, it's very hard to get funding for that, and that's true for a product company as well. The key thing there is if you can differentiate yourself in the services business. For example, cybersecurity is a very interesting area. If your manpower is very skilled in cybersecurity, you are really in demand. IoT, Internet of Things, right? So these are some new hot areas. If you can really scale your manpower in upcoming areas, you will really be in demand, especially from the venture capital funds. And we are actually looking for businesses which are services businesses in highly specialized areas.
All right, let's take in a query coming in from Munish Gupta. This is a call. Go ahead, Munish.
My question is, most of the MSMEs work in rural areas but are forced to follow the same set of labor laws as are applicable to large-scale industries. All this increases the cost of production, and thus MSMEs face a challenge in staying competitive. Is there any solution for this?
Okay, both of you gentlemen were saying that labor issues shouldn't and aren't really such a big issue, but clearly it's occupying a lot of mind space and a lot of costs as far as MSMEs go. So one is operating in rural areas. Two, for example, rural BPOs that we were talking about are not competing just against other companies which are in the rural space, but also against the likes of, say, a Tech Mahindra that's operating a rural BPO. So what advice would you have?
So we've actually invested in a rural-based company, in fact, a company called RML, which actually is doing extremely well. And I think, again, my personal view is that the next wave is really looking at capturing the rural wave and capturing the rural economy. In fact, given the penetration of smartphones now, even in the farmer community, you will see a very large number of businesses actually leveraging that. This is exactly what RML is doing. As an example, almost over 1 million farmers using the smartphone actually in their local languages, and I think you can leverage that to build lots of businesses on top of that. And that's what I think lots of new regulations are also actually addressing in terms of the needs of the farmers and capturing the real value sitting there, how you connect farmer directly with the consumer in the cities. So I think, as you said, labor, of course, I don't see that as a challenge in terms of labor laws, but I would see this as a huge opportunity where new business models are now being set up. Like we talked about BPOs, rural BPOs, which are now being set up in their local languages, leveraging the rural manpower, plus the information which is now being digitized in rural India to help actually use that back for the welfare of the farmers. So I think lots of interesting business models.
Sure. See, I would just like to add, I think under this present government, I think they are doing a lot to liberalize the labor laws to make it more entrepreneurial friendly. So whatever the bargaining power of labor really should become less important going forward, and the bargaining power of the owner and the entrepreneur will increase in this labor versus management relations.
Okay. So I hope that answers your query, Munish. Let's take in a next query coming in from Sonal Khanna. She's written in to us on our Facebook page, says that she's in the business of artificial fashion jewelry for the past year and wants to start exporting, wants to know what some of the prerequisites are, whether it's finance, infrastructure, skills, government clean sheets, as well as facilities which are available for such companies. So finance related question right up your alley, Hemendra.
You see, I think when you go into any export type of business, I think you have to first explore the market. I mean, here in this case, I think she wants to, do exporting of her fashion jewelry business. So I think you have to explore the market, see how things are, send your export samples abroad, and then start your financing process. Like, how are you going to get it bank funding? Because normally it should be bank funding. Are you, going to get open LCs? Because normally you won't have this advance payment. And then you have to then check up with the the customs clearing, and all that entire process has to be done. So I think you have the banking system at your disposal, and basically your bankers have to be satisfied with your plan and who the entity is at the other end.
Do you want to add?
I think interesting part in this particular segment is typical perception is that the customer wants to touch and feel the product before they actually decide to buy, right? So and that's been a perception about the online businesses, and people have been very wary of whether these businesses really do well. Actually, we've been very pleasantly surprised how actually this business has taken off with consumer just looking at the website picture of the jewelry they want to buy, and they actually spending money to buy jewelry. The challenge really is that if it's a large transaction value product, then people really want to actually feel the product. But if it's a 15,000 to 25,000 price point range, people are still comfortable actually just placing the order online. The artificial jewelry that she's talking about, I think the price points are much lower, and there is a much higher propensity to buy it online. So there is a huge market, and especially the exports, I think, is even a bigger market because the margins are very high. The costs of manufacturing in India are very low, and I think it's a good business. They should definitely explore it in various international markets.
Okay, let's take a very short break on that note, but on the other side, we'll continue taking all of your queries, so don't go anywhere. We'll be back in just a moment. Welcome back. You're with us here on Leaders of Tomorrow on ET Now. We're taking all of your queries, your calls, your Facebook queries, as well as your emails that have come in to us. And I have with me in the studios both Himendra Hazari as well as Vikram Gupta to take in all of your questions that have come in. And at this point, I have an email from Siddharth Bajaj. He says he wants to know how to take his business online and grow and see that growing further. He wants to know how to get funding as well as expansion for this business. So I think there are a couple of questions and a couple of broad, umbrellas of questions that we can look at. One, of course, is labor laws, and the second is finance. And a lot of queries are coming from MSMEs in how to make themselves more investment ready.
This is interesting because lots of people actually want to get online, and many times they don't understand what's the technology, how do you reach out to the customers, and it's very interesting. The way we've seen this grow is if you understand your consumer, if you understand your product, if you don't have technology, for example, you can tie up with people like Vincula who actually manage your entire backend. If you don't know how to reach out to the market, how do you digitally reach out to them? You have companies like Socrati, which actually take out your entire marketing site and actually help you reach out to your customers. So maybe I think it's a good idea if they want to get into this business, this is the time to get in, because if you broadly look at the market, 300 million internet users in India as compared to China, which is 600 million. In India, there are only about 40 million people actually buying online as compared to China, which is half of that 600 million population which is buying online, 60 million actually buying every week. So I look at it as a huge opportunity for online business because this is going to go to 500 million very soon.
See, I would just like to add, normally the traditional means of finance, a lot of the SMEs were banks. But when you come online, I think you get a lot of expertise today with the VCs and even the private equity funds, because not only are they willing to handhold you, for about 5 years and fund you, but more importantly, they can get you the expertise which you lack. Because of their diverse investments, or they have similar investments, they can have people, they have the advice, they have the intellectual firepower to actually guide them in their business strategy, which I think is extremely important.
All right, let's take in our next query. This is a Facebook post coming in from Rajesh Kullar. He says service tax is mandated to be paid by the 6th of every month, whereas the parties availing such services routinely make 90-day payments, thus making the vendor liable to fund even the service tax liabilities of the vendees. Penalties, he says, are to the tune of nearly 1.5% interest per month. These burdens imposed are creating negative cash flows for most service vendors. Gentlemen, would you want to start?
See, this is a big problem for the SME, not only just in services but also in manufacturing. And really the issue is, they get caught in this trap. Now, one way out is to go to a factoring company in India and they will, discount your invoice. But the problem with factoring in India is it is done with recourse to the seller. There is hardly any insurance, and therefore the factoring that is done here is very different from what is done in the developed economies. So it has really not taken off to that extent. So in the end, it becomes some kind of a bill discounting scheme in effect. But at the same time, it doesn't solve your problem, because even if the bank were to fund you, they will still take their pound of flesh. So which is still more, but it's just less than this penalty that he has to pay. So is there a solution? Yeah, I think there is no such solution apart from making that the person he sold it to pay on time, which at this moment is very difficult.
So I look at it, there are two aspects to it. One is, many times these MSME companies don't even know whether their service qualifies for a service tax or not. So I think it's important to first, get yourself qualified as part of, you qualify for that or not. Second is that, there is a minimum revenue requirement, so this MSME is typically, I think it's a 20 lakh number or something. If you haven't done a 20 lakh revenue, you don't need to necessarily file for a service tax. I think this number probably needs a relook. Maybe this number can be increased to kind of give a relief to MSMEs. At the same time, I think it's a very important point that your service tax liability becomes, it becomes a liability on the day 6th of every month, and it's an issue. We have seen that issue as an important issue, and I think in my view, this needs to be looked at.
All right, let's take in our next query. This is an email coming in from Lalji Savla. He says he's in the cold storage business and wants to know if he can get the benefit which is available to infrastructure companies. He also wants to know whether he can go about finding a venture capitalist who will stay invested for at least 10 years. Has this query ever come up to you?
Actually, and it's an important thing to understand. See, typically the venture capital funds in India, their tenure is, especially the Indian venture capital funds, tenure is typically 7 to 8 years. They get 2 extensions of 1 year each. So that means the overall fund life is actually less than 10 years, right? And during that fund life, you get the first 3 to 4 years for investments, which means your end point is defined, because you actually start in the day you start investing, your starting point. So which means if you made the investments in the 3rd year or the 4th year, you actually get only those many years less to exit, right? So we typically make investments with a time frame of about 5 years on an average. It can be plus minus 1 year here or there. So therefore, it becomes challenging when it comes to longer gestation period investments. So which means hospitals, for example, longer gestation periods, infrastructure investment, longer gestation periods are typically challenging. But there are investments which basically have already taken. If you start the project from zero, that is when the gestation periods are long. You can actually look at projects which are already funded, at least at the seed stage, or some initial investments already happened. In this particular case, a cold storage, I think it's an excellent area actually. I would love to look at investment opportunities in that space, because there's a huge white space there. But I think there is a technology application in the business which actually scales up the business faster. That will make the case much easier for us to invest in.
Even as we're talking about and waiting for GST, one would assume that cold storage would, sort of classify and qualify for it.
See, one thing is there that if the cold storage is in an agricultural area or in a rural area which services agricultural products, then it comes under priority sector funding. It becomes a direct agricultural advance which banks have to comply with. Now, if it is non-agriculture, there is the India Infrastructure Finance Company, which is a government entity, which does give cold storage, subsidies. I think about 35% of the capital cost, which is back-ended, for a 5,000 ton and over. So you get some subsidy, and if it is in rural areas, the banks will happily finance it for their priority sector requirements.
Okay, let's take in the next query. This is also an email coming into us from Lokesh Arya. He's asking how he can go about finding the right profile of people for his business, this without incurring too much of additional costs. And cost, of course, is something that MSMEs would keep a very close tab and a very close eye on. And he says, how do you go about finding the people? And I just want to add, because this is a query we get quite often, how do you go about retaining these people without too much of an additional cost?
I think there are ways to solve the problems. One is that you have to cast your net much wider. So which means that you have to look for talent in the right places. Given the way technology has grown, there's a LinkedIn these days, and I use LinkedIn very extensively. So if you go to LinkedIn, you'll find most of the professionals are there on that platform today. just go and look around with people who actually you think are the people you're looking for. So it's easy to find the talent through platforms like these. Of course, now the second question is, let's say when you found those people, how do you make sure that they find your business attractive enough? So of course, you have to find people who are equally passionate. And if you're like a startup, you need somebody who actually looks at the same vision as you are looking at. Therefore, you need to bring people either as co-founders or people who actually are willing to take a much higher risk and willing to take salary cuts. The other most important part, the third part of which is the retention, I think the best way to address that issue is actually work on an ESOP kind of a model, give them a stake in the upside of the business, and which is the regular method that the startups are using these days. As the value gets created in the business, these people actually see value building up for themselves.
I think I just like to add one more point is that when you attract such people, you can retain them only by empowering them. It is not just salary. And again, this is something which comes very reluctantly to most Indian promoters, that they don't want to give up control. I think that mindset has to change, because once you empower people, and you can empower them by giving them independent responsibility, by giving them shareholding. I think that is really a mindset change which they have to be open towards.
All right, let's take in another query. This one has come to us on Facebook from Prashant Pansari. He says the government of India had an STPI policy that had a sunset clause in 2012. Today, they're seeing a lot of innovative startups which are coming up and face the challenges of raising capital. He wants to know about the possibility of bringing this sunset policy back as far as STPIs go, and whether that's something that's looking possible as we speak.
So I think what the government has done, is recently with this entire Startup India action plan. I think lots of policies which have been brought in address some of these issues which were part of the sunset. I think if one looks into the details of all these startup action plan, there are quite a few benefits available from a taxation perspective. For example, the 3-year tax holiday, for example, for the startup. I think there are quite a few benefits available, even from the investors investing into the startups. Earlier there was issue of whether it's an income tax versus a long-term capital gains tax or a short-term capital gains tax. I think, government is making all the positive moves as I can see from a taxation perspective, especially in the startup ecosystem. And I think collectively, if you see, all these taxation specifically related to MSME, I'm very happy to see some of these positive changes to help the startups grow.
All right, gentlemen, thank you both very much for your time today. With that, it's a wrap on this edition of Leaders of Tomorrow. We'd love to hear from you. If you want to reach our experts, do write to us at leadersoftomorrow@timesgroup.com. Reach us on social media using the hashtag LOT, or call us on the number which is on your screens. Thanks so much for watching.